Hello and welcome at Value Investing, where we try to estimate the intrinsic value of different companies. Recently, I've done a video about Verizon, one of the telecommunication service providers in the US. Now I think it's time to have a look at AT&T. The usual disclaimer: this is no financial advice and just my personal opinion. And now let's hop right into the video. AT&T is down around 24% over the last year, but they have a juicy dividend yield of around 8%. AT&T is one of the leading service providers in the US, as they have a market share of around 45%. The only two competitors are Verizon and T-Mobile US. Now let's hop into the stock valuation tool, where we have a look at AT&T. I've plugged all the values in for AT&T, and we can see that the trailing 12 months earnings per share are negative, around minus $1.3, and the earnings per share all time is fluctuating quite a bit and is in the negative side recently. As already said, the dividend yield is around 8%, which is quite nice, and they are currently trading at around $14. Now let's have a look with Graham's valuation. I've plugged in all the values and also the forward-looking earnings per share, which I took from Seeking Alpha, and they are kind of bullish for the EPS estimate. So I took 2.43. I projected the EPS growth rate of 0.5%. With all the values, we get an intrinsic value of around 16. Please keep in mind the trailing 12-month EPS is negative at around minus 1.3. But this would give us a negative intrinsic value and would not be that accurate. Now let's have a look with the multiples valuation. For the multiples valuation, I have used Verizon, T-Mobile US and also Vodafone. I've plugged in all the values from the stock price and their EPS and calculated the price earnings multiple. And we can see there is quite a huge variance between those values. Instead of taking the average of the PE multiple, I took the median of the PE multiple, as this is more accurate, and this is basically the price earnings multiple for Verizon. If we multiply this with the forward-looking earnings per share, we get an intrinsic value of around $16 for AT&T. Now let's use the discounted cash flow analysis to analyze AT&T. Please keep in mind that the fundamentals of this company has changed, as they recently spin off Warner Bros. Discovery. Following this action, they have cut their dividend. As the fundamentals have changed due to the spin-off, I didn't use the average growth rate with the historic values for the free cash flow, but I projected a growth rate of 0% for now. With this growth rate, I've calculated the future free cash flow and also the present value of the future free cash flow. Considering the perceptual growth rate and discount rate, we get the sum of the future free cash flows. I've plugged in the values for the cash and cash equivalents and also the amount of debt they have to get an equity value, and with the outstanding shares we get an intrinsic value of around $10. Please keep in mind the total debt is really huge here, especially compared to the cash and cash equivalents. This is a very similar situation to Verizon and also T-Mobile US. It looks like it's common currently for all of the telecommunication service providers to have a huge amount of debt, and this is probably also why all of them are trading at a discount. Now let's have a look at the dividend discount model for AT&T, considering the recent spin-off and also the dividend cut. As we can see here, they have cut the dividend and basically didn't increase it anymore. So they had a very steady growth of dividend over the last years, but with the spin-off they cut the dividend and it seems like they are not increasing it. Therefore I've projected a growth rate of 0% for now, which provides an intrinsic value according to the dividend discount model of around $16. Please keep in mind that it's also worth to have a look at the basic outstanding shares. AT&T has basically no share buyback program, as they are diluting their shares on a regular basis, probably in order to invest into infrastructure. This we don't really like to see, but I guess that's just how it is. And now let's have a look at the output tab. Considering all 4 valuations and averaging them together gives us an intrinsic value of around $14.5. This is almost the current trading price. Thus, if we would like to buy with a 20% margin of safety, our acceptable buy price would be around $11.60. After comparing AT&T to Verizon, I think there is much more potential at Verizon than at AT&T. Despite that, I would like to know what you think about this company. Please leave a comment down below. And again, this is no financial advice, it's just my personal opinion. And as always, thank you for watching.